institutions on both the traditional sense as well as within crypto. And besides that, we also have an asset management arm, which is licensed by out the UK.
Got it. Steve.
Sure. Thank you for having me
Yeah.
again. My name's Steve Bowman. I serve as the managing director here in APAC at BitGo. And in terms of what is BitGo, what do we do, the DNA of the firm, much like Bitstamp and GSR, we're a veteran in the space. This April will mark 10 years that we've been in business. We serve institutions only, and many of us view us as kind of the stable pair of hands in the crypto space. We started out with wallets as a service, then spun up a regulated qualified custodian, and have since bolted on things such as borrowing, lending, and trading through our BitGo Prime offering. We've also spun up access to staking, NFTs, DeFi, even loan servicing. So a lot of institutional customers value us for being a one-stop shop. But ultimately, the reason we're here is because our goal is to deliver trust in digital assets. And whatever we're doing must be resonating with customers because we have over 1,500 customers around the globe in over 55 countries.
Got it. Okay, so to start things off, right, I wanted to talk a little bit about market sentiments, right? So I think tonight, especially there's a big event happening, right? CPI numbers coming out. Last few days, things have been looking slightly positive. I just want to get everyone's sentiment on where do you see market is moving given what has happened and transpired over the last 6 months, right? Where do you see numbers changing over the next course of like 6 to 12 months? You want to share first?
Me first? Okay.
Yes,
No,
sir.
it's really interesting that actually on the table we've got the OGs, right? We represent the OGs of the space. We're not too old ourselves, but it's, I think, a decade in the space, says a lot about each of our firms, right? And I think if we try to predict, prices for the next 6 months, the next 12 months, that's just as hard as predicting what the Nasdaq or the Hang Seng is going to be, at the end of the year, right?
Yep.
I think for us and personally, what we observed is, there's going to be persistent volatility, right?
Yeah.
As an exchange, volatility is great. We love volatility, but not that it's a function of the market, but there's still a lot to play out, right? We've seen, yes, very publicly, firms caught up in the contagion from 3AC and Terra Luna. I think that's still to be played out,
Yep.
although somewhat priced in. But there's still, we can expect more to come out, right? Because I think the next 6 months will be a test of financial strength, right, of a lot of firms. And
Right.
we were talking before off camera of some that may have overcommitted themselves in many different ways. So we're still going to see that play out. Volatility is going to be there. We've got Mount Gox remediation happening. We don't know when that's going to happen because it keeps on changing the date. That drives that volatility that I was talking about. And yeah, look, as you pointed out, we shouldn't look at crypto markets in isolation. They're connected to the wider economy, right? We can't say, there's no correlation or inverse correlation there. And the war on inflation or battle against inflation is going to play out until,
This year.
Yeah.
The whole this year. Yeah.
Yeah.
Do you guys have any inputs?
Yeah, look, a couple comments. First is no one has a crystal ball. So for all those that like to comment on where Bitcoin's going to end up or Ethereum's going to end up,
Yep.
it's nothing more than a stab in the dark. I will say this, though. I do think we could have some positive catalysts coming our way this year. The first is quite counterintuitive and might make me a couple enemies out there, and that is further bankruptcies and consolidation. Because there are a couple of businesses out there that are walking wounded, and much in nature, like in business, you need to have the dead wood fall off in order for there to be some regrowth.
Right.
The second positive catalyst that I see potentially coming down the pike is further regulatory clarity. And I think that for some of us that run towards regulation, this is going to be viewed positively, mostly because there's a lot of institutional capital just sitting on the sidelines waiting for the starter pistol. And frankly, if they were to get in now, it would be at much more attractive entry points than, say, a year ago.
Yeah.
However, they're not going to wade into the water until they have regulatory clarity up to their standards. But when they do allocate, the amount of money at their disposal, if put to work in digital assets, is going to provide enormous lift to Bitcoin, Ethereum, and all other digital assets.
Okay.
I mean,
CJ.
I'm going to approach it from a slightly different angle, and the
Yeah.
reason why is I've given a couple of opinions on similar mode in the last couple of months, and I don't think it's changed.
Yeah.
I think you need to bifurcate and you need to split up the crypto markets.
Yeah.
On one hand, you're talking about prices, but on the other hand, you're talking about the tech. Now, the winter, it's come, it's here, everyone is hunkering down, batting down the hatches, and I fully agree with the gentleman here. I think we are going to see more firms under duress because of where prices are. But if you look at it from another angle, innovation, that hasn't stopped. The builders are building. The quality builders are there. The layer ones are coming up. What we're going to see this year, if you ask me, is on the tech side, what we're going to see is a lot of the existing layer ones, a lot of the layer twos, the potential success of ZK rollups, for instance. These had their days in the sun in 2021, right?
Yeah.
2022, there was a bit more of a sideways angle, but they had their days of the sun of saying, look, we're the new kids on the block. That is no longer the case. There's a lot of layer ones out there who, in theory, should be quite established by now. And the worst part, and the best part, actually, if you think about it, is from a competitive angle, there are new layer ones coming into the space. So the question now, and I think what we're going to see for 2023, is one, an improvement in the quality of innovation. But two, I think it's the approach from what is the actual use case behind a lot of the tech and a lot of currencies. In terms of price action, I fully agree. I think a lot of us were hoping that there is an inverse correlation with markets because it's supposed to be the inflation hedge.
Yeah.
That obviously hasn't proven true.
Yeah.
But I will look at it from a more positive angle. There is a lot of money on the sidelines waiting to come in. Guys looking for the opportunity that when the prices hit the right level, should we scale in by selling puts? Should we scale in by just buying in blocks? And I think that is constructive. I think the overarching cloud, though, to be a bit worried of, is obviously inflation prints. It's obvious to see everybody's expecting 2023 to be an overall recession on a more global basis. That is probably the elephant in the room when it comes to crypto.
Right. So we mentioned a fair bit of stuff, right? I wanted to go a little bit deeper on the innovation part that you guys that you briefly mentioned. What are some of the stuff that you guys are working on right now that you think will be very beneficial for the market or for the respective platforms that you guys are on for this year?
I mean, to begin that, right? So maybe to explain very briefly how does a market maker fit into crypto to then talk about innovation.
Yep.
Liquidity provision in crypto and digital assets is very different from equities. Let's say in equities, the reason why is, let's say you want to trade a stock. Everybody trades at a singular venue. So all the financial institutions come together. That creates liquidity. In crypto, it's very unique. One, liquidity is sparse across different centralized venues, decentralized venues. But not only that, if let's say tomorrow Tesla stock gets delisted, example, Tesla will still produce cars, they will still produce their flamethrower, their tunnels, and
Rockets.
they will make money, right?
Yeah.
And rockets as well.
Yeah. Right.
But if let's say tomorrow an underlying token of a layer one stops circulation, there's no markets, no one's trading it.
Yeah.
Slowly what's going to happen is you're going to see a decay in that layer one. So the way to look at it is that within crypto, a market maker, we almost view ourselves almost as an infrastructure layer. We have to be there across the board. We have to be market neutral and we have to be agnostic. So from our point of view, what does that mean? From a development and innovation area amongst market makers, I think that it's not so much tech innovation. Right now, it's an innovation of standards. What is the right way to position yourself to, as you mentioned, the regulators are coming. How do you position yourself to do the right thing by markets at the end of the day? Because the engines are there. Let's be honest. The same engine that I use to market make an equity, I can apply it with some tweaks to do a cryptocurrency.
Yeah.
But the approach must be different, the transparency. And I think that's where we're seeing a lot more innovation amongst trading shops. But honestly, in the last couple of months, well, yeah, market makers have taken a hit. A lot of market makers, unfortunately, had assets on venues like FTX.
Yeah.
And because of that, that's why I think in the next couple of months, it will be trying for a few. But when the dust settles, well, you're always going to have a market maker in this space. And innovation will continue to be, how can we help market make more efficiently and cost effective at the end of the day?
Got it.
Yeah, if I could dovetail on that, builders keep building, and one thing that's often forgotten, right, is even in bad economic environments, great companies get formed. The two examples I always like to to point out, which I'm old enough to remember, unfortunately, are, after the Asian financial crisis in '97, a little company called Netflix was founded. And then in 2008, when the global financial crisis was underway, a little company called Airbnb came about. So there's going to continue to be innovation. In terms of what that innovation looks like at BitGo, we've kept trying to develop products that resonate with our customers. And it's been two-pronged. The first prong has been doing our bread and butter, which is leading with secure products such as qualified custody, where people feel that their assets are being safeguarded. And unfortunately, when you have market failures like, say, FTX or Three Arrows Capital, those products tend to go up in popularity because there's an awakening around risk, and not just what are you trading, but how's it being held and who's it being held by. But further to that, we are also actively trying to come up with new things where the market has given us feedback and would like for us to provide some of the security that's in our DNA, but towards a new end. Case in point, we're spending a lot of energy right now on something we're calling the BitGo Settlement Network, which will allow clients of BitGo to settle off-chain, off-exchange from the comfort of qualified custody, which obviously reduces counterparty risk, increases capital efficiency, but also allows people access to the widest array of products out there in the crypto space, because crypto, having tentacles into nearly 200 crypto exchanges on planet Earth, is well positioned, I would argue uniquely positioned, to offer such a product relative to competitors.
Len, anything to add on?
Yeah, I actually really like the point that CJ made earlier, right? It's about what is going to drive price action. And he talked about innovation, right? And you brought it into, how we as firms are innovating, right? But what we're yet to see, and hopefully we'll see emerge this year, or just like post the previous winter, is this killer application or this killer use case where we'll just say the more mainstream will say, I need and have to be a part of this in order to gain the utility, right? We haven't seen that yet, and that's what we're certainly waiting for, and that's the $1 million question to be answered, right?
So I mean, earlier we dropped FTX a fair bit of time, right? I want to talk a little bit deeper about that, because that seems to be the topic of the year, for a lot.
That was last year.
For last year, right?
That was last year.
So for a lot of people, right, your first touch point would be an exchange, right? To on-ramp, to purchase your first crypto, whatever, right? Given what FTX has done, what do you think we can do, or individual platforms, your respective platforms can do to reassure people that, hey, we are different, right? So I think that's something that even when we talk to people, our audience as well, right? It's always wow, FTX also can do this. They are backed by great people. They should be credible, but they can do this to me. What now?
I'm looking at Leonard because he's probably the one. He's probably the one that's looking and saying, "Well, this has been a pretty good harvest season." Sort of.
Yeah, I mean, you get clouded in the hype when markets are good and you see celebrities spruiking certain brands. That's natural. We go back to first principles. We need to come back. We've said this a lot. We need to educate the market, right? And sometimes you need to educate the market on things that are really not sexy, right? Which means, what does it mean to be a regulated exchange, right? Or any type of service provider in the crypto space, right? Consumers need to know that. They need to know the difference between being regulated in a major financial center. What's the difference between being licensed versus having a registration? There's a big gap there, right? For us, we've had the very unsexy strategy of being, pursuing licensing, pursuing compliance, which we started back in 2016 with our first license with the CSSF in Luxembourg. It's really hard to do that. It dedicates nearly 30% of our workforce. I mean, I would like to say it's 100% because we're all responsible, but really 30% of dedicated staff to that. And consumers don't probably don't really care about that, but they'll start to care more, and we need to communicate that plainly and completely, because I know the topic of today is FUD, right? When you try and explain your compliance and your risk management on Twitter in a piecemeal way, it's not the right medium for that, right? It's a little bit embarrassing sometimes to be part of the industry that does this, because there's a time and place to be on Twitter. Not so during FTX saga, when you're trying to explain we're a safe and secure platform.
Yeah. I mean, there's a certain amount of irony in the fact that we deal in a space that, you know, touches on trustless systems and all that, yet some of the actors in the space basically rely on the public to trust them because they tweet well. It's actually quite comical.
Yeah.
In terms of how we regain trust or how we build trust, I think you know, it touches basically on 2 points. The first is education, which has been touched upon. You know, things such as how does margin work? What is leverage? What is commingling? What is a custodian? Things like that, so people know what they're signing up for. But then the second point is transparency, and you know, asking questions such as, is this entity audited? Are they licensed? Are they peer reviewed? Is their SDK open source? Because ultimately, like many things in life, if you have nothing to hide and you know that your protocols are above board, then you're more than happy to put that on show in front of others. And as a firm that also runs towards you know, licensing and regulation and likes to do things in an above board manner, we think it's high time for the rest of the industry to kind of wake up to the fact that we have a lot of ground to cover before we regain the trust of the public, and trying to start out with education and transparency is probably, you know, 2 good first steps.
I think for us, I mean, so this is a unique angle because you're seeing it from an exchange, you're seeing it from a custodian, and they're the ones who deal with the day-to-day. Retail is probably the way of the crypto, so the general public. At GSR, we deal a lot with 2 types of clients, right? We deal with the projects, and we deal with high net worth individuals and family offices, right? Now, when it comes to the FUD that has happened, and it's actually not only FTX. It's actually interesting. FTX was almost like the final kick in the straw, because we saw an evolution last year. And I'm going to focus more on this one thing, which is project treasuries. So treasury management is the massive thing, right? And you kind of feel like they're just all jaded. And it's actually evolved over 2022. Treasury management in 2022 started off with projects going to a company and saying, can you just manage the whole treasury for me? That was 3 arrows. Then they went kaboom. Then they were like, okay, fine. Let's do it ourselves on DeFi platforms. Then Terra Luna happened, and it sort of went, okay, that didn't work out very well. Yeah. And it's okay, we're jaded, we're tired, let's go back to basics. Let's go for borrow lend. And then Celsius sort of happened.
Yeah.
And what that's actually happened is almost like a funnel where it started pulling it towards what we've been saying, where because of our backgrounds from the traditional world, there is something to be said for counterparty credit risk management, a counterparty risk, where you know who you're facing. So what we've noticed on our side, where we do actually at GSR, we do quite a bit of treasury management for clients, is the way it works now is a lot of clients are like saying like, look, I don't want to transfer you all my crypto, firstly. 2, I want to know exactly what type of trades you're doing and what you're doing, and I want transparency on these. So what that results in is very akin to what you saw in traditional finance, where it ends up being bilateral trades to manage the treasury.
Right.
Where the treasuries themselves have one guy, almost a CFO or an investment guy, who says, okay, what are the ways that I can generate yield on my holdings? This is the yield targets I have. What do you have? And it's our job then to come up, okay, these trades make sense for you. This is what it is. And we look at that on a bilateral basis. And the benefits of that is, 1, they can do due diligence. They know exactly who they're facing. It's not a gray wall. If something were to happen to the assets, you come after the organization. Whereas if you look at what's happening with Celsius, for instance, everyone is now referring to the fine print and who owns the assets at the end of the day. And I kind of feel like that's the evolution of FUD in 2022. And to develop trust is about telling people that, well, not everyone is bad. There are organizations like ourselves, OGs in the space, who have said, look, we've been doing the right thing since 2011, 12, 13. We understand that we're not the sexiest firms around, but because we do the right thing, because we approach it from the right angles, we will be around. We're almost like a lasting institution in the space. And I think that will help in the medium to long term.
Got it. So with what has happened with FTX, right? Where do you see regulation playing out? You briefly spoke about regulation earlier, right? Where do you see regulation playing out this year, in the new year?
Sure, a couple thoughts on that. The first is 2023 is going to be the year where regulators have to do something, anything. Just the infighting that you've seen, for instance, in America between the SEC and CFTC for who's going to be the regulator. You really want to lean in and say, children, put down the toys, go in a room, figure it out. Second comment I would make is that regulators globally, post-FTX, have had front row tickets to the law of unintended consequences. Again, bringing it back to a US context, because the US was unable to get a cohesive regulatory framework up and running, a lot of actors went offshore. And when they went offshore, the safeguards and protections were clearly not as robust. And then you had accidents like the ones that we've seen, FTX included. Then I would say that the third teaching that regulators will probably take on board is that they're not the only game in town. In 2022, all of us saw in real time people realizing that you can go to other jurisdictions where you might have a more productive regulatory framework. So, in Asia, for instance, we've seen people go from Hong Kong to Singapore, and now that some are starting to go towards Dubai. And I think that would have also been a wake-up call for some of these regulators. Now, I think that what the market wants is obviously regulation that is sensible and actually targets the core problems, but also has to be commercially viable. And finding that sweet spot is going to be the challenge. I know that my wish list, if I could indulge for a second, would be if regulators just figure out one thing, and that is whether or not people are allowed to be in the exchange business, the custodian business, or both. Because we have very good models, such as traditional finance, where the New York Stock Exchange is an exchange. They're not a custodian. There's a reason why we have the Investment Advisors Act of 1940. We've seen this movie before. We know how it ends. And if I was a regulator, I would sit back and go, this is a pretty easy win. Either you're an exchange or you're a custodian, but you're not both. And further to that, if they could clarify rules around the use of third parties to custody assets, there are some regulatory regimes around the world that are tackling this issue head on and publishing quite proactive, sensible regulations. Japan comes to mind, for instance. And I think that regulators really need to take the front foot on this and provide clarity that the market is starving for right now.
I mean, I agree. I think 2023, the regulators are going to do something. Who's going to lead by example? Well, that's up in the air. I think that the regulators, part of their difficulty is which part of crypto do they look at regulating? Because there's so many aspects of it.
Yeah.
But I kind of feel like maybe the right approach, and maybe what we're going to lean towards, and actually you touched upon it, is regulate the institutional participants. When I say institutional participants, I do not mean in the term of an institution, but rather firms who are critical to the infrastructure within crypto to make it work, fit and proper. Do they deserve, are they doing the right thing? I mean, we've seen this in banking. Let's be honest, FTX, 3 Arrows Capital, etc. None of this was a failure of crypto. This was a failure of individuals doing exactly what we saw in traditional finance. It's about fit and proper at the end of the day. It is about going after the big boys. Look, you are a big player in the market. You are very visible. Are you the right person? Are you the right organization? Can we go after you? Could you even earn this license, for instance? And I think that's the direction that we probably would head in.
You have anything to add?
Well, I mean, as an exchange, we're under a very big microscope in terms of regulation. The industry is going to get its cake and have to eat it. As we've all said, it's definitely coming. Just to echo that, we would love it to be complete, right, in terms of how regulators look at all the different players, all the different infrastructure players, right? How do they look at tokens, right? Here in Singapore, the regulators looking at disclosing listing policies, right? In Hong Kong, I think today they've listed a guidance around what types of assets retail should access, right? But what is the thinking behind that is yet to fully play out. And for me, because we operate as the global exchange, harmonization between different regimes is going to be really key. yes, you can do that at a block level in the EU with MiCA. That's great for us. That's great for the industry. In this part of the world, you know, mutual recognition has been tried in traditional finance for donkey's years, right? And we've never achieved nirvana in that sense. But for crypto regulations, maybe there's a chance to try and do that, to close the arbitrage that Steve talked about, right? So my wishes for harmonization in this part of the world would be great. And right now we're in this transitionary period where we've asked for regulations, they're forming. We're also many firms are trying to be licensed as well.
Yep.
But while you're not, because A, there aren't the rules in place, or B, because it's being processed, that in itself creates FUD, right? Because let's say your everyday retail investor is being told XYZ about unregulated players, but not everyone can be licensed just yet. So it's this transition period that's quite difficult to navigate, right?
Yeah. So building on that, right? What would you say is your biggest challenge right now? Is it on education part, or like communicating to people that, hey, this is a transition thing for us? You know, for you specifically.
Yeah, I didn't say that statement for Bitstamp, so to say, right? Because we have the benefit of already being licensed in some of the major jurisdictions of the world, we can lean on that. But for an upstart, right, who's trying to bring their own, you know, game to the table, there's a really high barrier to get across, right? So yeah, that's just more of a general statement, not
Got it.
on Bitstamp's part. But yeah, look, regulations are. Regulators already signaled that they want to move away from AML, CFT. You know, that's a great place to start. But as CJ said, fit and proper tests, capital adequacy, especially like for custodial businesses. Just to name a few, right? That's going to come into flavor, right? Segregation of assets. Well, most jurisdictions have that in place already, right?
Yeah.
So yeah, these are things that we expect to come. And
Got it.
Yeah.
Okay. For both of you guys, what would you say is your biggest challenge that you face right now?
I'll go first. How much time do we have?
Write the book.
I was about to say. Probably the biggest challenge is around education, and it cuts many different ways. So the first is in the form of understanding risk, in terms of people recognizing that running hundreds of millions of dollars worth of crypto on a single hot wallet address is a fool's errand. So there needs to be education there around what you need to have in place as a business to be institutional grade. The second has to do with marketing, and in terms of the fact that in a largely unregulated industry, there are some outlandish claims made, but there are also some that are a bit more nuanced. And for instance, in custody, which is our bread and butter, I'll give you an example. There are very well-known firms that talk about self-custody, yet when you look at their marketing materials, every other word is custody. So which are you, mate? And also, as someone in the industry, if I'm confused, then what about the ordinary retail punter? And I also would have thought, if you're a regulator, one of your key roles is to protect the investing public. If there are marketing practice along those lines, they are misleading at best, and that's something that also needs to be mopped up and can be dealt with to some degree with education. I think that the last bit of education is actually one that's probably not thought of much, but has to go with institutional investors, you know, the LPs that fund a lot of businesses. Up until FTX, you could have been forgiven for not asking due diligence questions such as, so how do you hold my stuff? Where do you hold my stuff? That game is over now. And I think that the more investors, especially in the institutional world, that push from the bottom up to the people that they fund and say, what is your actual solution here? Are you using a qualified custodian? I think that that's going to be something that also, helps the industry and would alleviate a lot of my gray hairs if I did have hair.
I think our biggest challenge.
Yeah.
I can give you one word. It is actually education.
Yeah.
And it's education to practices within the space.
Yeah.
As an altcoin market maker on our side, for instance, there are certain practices which a market maker should always abide by. For instance, you should be market neutral. You should be price agnostic. The volume is what the volume is. Your job is to make levels, to make a book so people can trade.
Yeah.
But the problem is that in the race, there's a lot of exchanges, and unfortunately, it tends to be more Asian exchanges, try and compete for users. It leads to bad practices, right? Your wash trading, for instance, the problem of fake, or I would say that not true prices of underlyings, for instance. And there are firms out there, unfortunately, in the trading side who facilitate these things.
Yeah.
This needs to stop. And the reason why is, once again, Steve touched on it very earlier on, there are a lot of guys on the sidelines waiting to come in, the institutional guys.
Yeah.
But they can't even trust the market because the practices which are happening in this market is stuff like they saw back when TradFi wasn't regulated as well. It's like, this is reminiscent of way back in the 70s and the 80s, for instance. So education is very important, but not only for the exchange side of things, but it's also teaching the projects, the builders. Because for the builders, a lot of them in their mind are my token, my token, my token, my crypto, my crypto, my crypto. But it's not about that. Your commitment is to build a product, an ecosystem. And the problem is that when you get carried away and all you tend to do is price watch your underlying, your token, then where's your time for building? And the reason why is, once again, it's education. What are you trying to achieve? So we find it as a problem because being not conservative, but rather being the ethical guys in the room, we are trying to say, look, this is the right practice. And getting people to understand why it's important, well, that's a journey. And I think in 2023, though, that will be a more progressive part. More and more people are understanding this because of incidents like FTX. For instance, can you run an exchange and a market maker at the same time? That made no sense. Well, look what's happened. And I think we're going to see more of this.
Got it. So it seems like the theme is around educating people, right? How do you think things can be? Because education seems to be just a matter of like putting information out there, right? But there's only so much limitation or that we can do in terms of like putting information out there, right? What do you think can be done to educate more effectively?
Well, one thing I would say is actually just go to first principles, almost apart from crypto. I think what we would call common sense. As an example, for some strange reason, in the past few years, experience has become a dirty word. And you have to almost take a step back and try not to laugh when you see some of the accidents that have happened and seen some of the profiles that could have been behind them. What I like to say is, in your personal life, if you were going in for open heart surgery tomorrow, would you want someone that graduated from med school yesterday? Probably not. Same with your airline pilot. If they got out of flight school the day before, probably be a little nervous when you hit turbulence. Yet for some reason that is inexplicable to rational actors in the space, crypto has gone a bit of a pass. So my big public service announcement to viewers and the general public would be, use some common sense, look at the people that are involved with some of these projects and ask yourself, would they have the faintest idea whatsoever with respect to what they're doing? Because I do think that there is something to be said for being on the cutting edge and no one has real experience, but there is something to be said for literally and figuratively having adults in the room, which in the case of BitGo, is people with 10, 20, 30 years of technology, security, and finance experience.
I think when we look at education, I think there is actually an efficient way to do it, which is interesting, actually. Rather than go, and once again, I'm focusing on the project part, because if the project does it right, it does trickle down, because those are the retail guys who are buying the underlying token. So it's almost like that secondary third effect there.
Yep.
How we do education then is to work with a few of the more important guys in the space, the exchanges, the custodians who talk to these projects. We also talk to the VCs. And unfortunately, the VCs, a lot of them are a lot of the times the ones who perpetrate the problem. Because a lot of these VCs, especially crypto native young VCs, are like, I put money in you. Where's my 50x? Where's my 100x? That needs to stop. And rather, so what we do on the education front is we tend to work with a lot of these participants, VCs, the exchanges. And what we do is we do education. We run workshops where we teach them within the general space, this is a best practice. And that trickles down. And eventually what we're hoping for is if you do enough of this, it leads to an overall cleaner market because everybody's trying to abide by it because they know what's right and what's wrong. And I think that's the approach that we're going to take.
Yeah. Okay. Leonard, anything to add on?
Yeah, I think when we're talking about education, I can only speak for an exchange perspective. We, as an exchange part of the industry, are focused on educating retail investors, right? It's not just crypto literacy, but it's financial literacy. I think in combination, it's a bit lacking there, right?
Yeah.
But where we haven't played is educating our institutional clients, right? Because not everybody that works at a bank or a brokerage firm actually knows the ins and outs of the crypto industry. And no one wants to say, actually, hey, I don't know, I need help, right? So we should probably develop that space and educate more of the professional space, right? And maybe it shouldn't come from a service provider that's trying to sell you something, right? It could come from an independent source, right? And that's also what's missing from the traditional space is your independent advisory, your independent rating houses that people can go for education, for advice. Yes, there are some players there, but it's still, a very nascent space. So I think that's, what can be done for education. Like if you asked everyone on the table what was the challenge, I would have said education too. I was busy sitting here trying to think of something else, right? But it really is education.
You've got to toe the party line because we're all the same.
The OGs say the same thing, right? That's what your parents tell you, study hard.
Yeah.
Exactly. Good point.
So building on the education part, right? How can one identify red flags? I don't know whether we have an answer for this because FTX again, nobody saw it coming, right? Because building on your point earlier, Steve, right? Look at the guys behind. Is it just the credibility behind the platforms? Do we go and scrutinize every platforms before we commit our money into the platform? What are some of the red flags that you think are more common sense than much?
Sure.
Yeah.
Look, if someone's hell-bent on committing fraud and they have one or two people that are more than happy to be complicit, that's always going to be difficult to safeguard against.
Yeah.
That aside, some of the red flags are things such as if you ask someone, okay, show me your executive team, and you see that there's not a lot of experience full stop, or even worse, a lot of applicable experience, that's a red flag.
Yeah.
Jurisdictions matter. There are some places that are definitely more robust, Singapore being one of them, where it's seen as a great credentializer if you have been painted by the brush of one of these top tier regulators. That's another thing to look for. But going back to the earlier point of common sense, it's things like if you ask someone, hey, so how does your technology work? And they say, oh, you wouldn't understand. It's not for the feeble mind. That's usually a red flag because I've always found in my career when someone can't explain something clearly, it's because they have no idea what the hell they're talking about.
Yeah.
Further to that point, if someone isn't willing to undergo the prostate exam of, say, audits, applying for a license, things along those lines, that also should get your spider sense tingling a bit. And again, it's quite frustrating for people like our firms who are, for lack of a better term, mature adults in the space, to see these types of behaviors ever be given a moment to begin with, because they should have never existed in the first place.
Yeah.
So I think that if people apply a bit of common sense and things don't line up, you're usually probably onto something.
Got it. Okay.
I'm going to use a crypto term, which is DYOR, which should apply in all aspects. Right?
Yeah.
I had to actually figure out what this meant, to be fair to you. So do your own research. And I think that part of it is, crypto, one thing about crypto is you think about what is crypto, right? Crypto is almost socialization. It's for the masses. And it is out there on the internet.
Yeah.
Through Reddit forums, Quora, Twitter. Although I agree with Leonard earlier on, you should not be explaining your compliance via Twitter. But I am saying that through all of these means, you should be able to do DD. You should be able to get an understanding. And the other thing that I've figured out that actually makes sense in crypto, well, the phrase where there's smoke, there's probably a fire does exist. So go out there, find out about it. If there is something, and sometimes the way that smoke is actually pretty clear cut. The way they explain, you're like, yeah, that makes sense. The one good thing which is actually pretty cool about crypto is the nature of the blockchain. It's traceable. So you can check the movements. And based on that logic, well, it does give you a picture. So I stand by. I think on one hand, yes, it's up to the participants to make sure that we do the right thing, that we are compliant. But I agree with Steve as well. If literally enough people within that organization say, look, this is going to be our fraud, well, you can't.
You can't.
And it's the same as it's the same as TradFi, right?
Yeah.
That's why there's so many institutions which still happen. It's the same logic. But a lot of it comes down to the user. Understand what you are trying to invest in or buy. Understand who you are going to use, and understand the landscape. Who are the different choices? Why are they different? And that would say a lot for it.
Okay. Leonard, anything to add on?
I mean, I don't really want to repeat the good words of my colleagues. I mean, not my colleagues here, my partners here today. But, you know, red flag, the market is very sensitive to red flags today, right? In the heat of November, right? If you as an exchange had any delay in, let's say, withdrawals first and foremost, right? Deposits, fine. Executing a trade, settling a trade. Any glitch in that wasn't properly explained, right? As Steve said, that became a huge red flag, right? And I think the market's really jumpy at this moment. So we just got to keep on, well, not giving them an excuse to say, hey, what's going on? Meaning keep the service levels to the highest standard, exactly. Yeah. And you're able to do that because you already have financial operational risk controls in place. It shouldn't be an issue. If there is an issue, just explain it really clearly, plain speak.
Got it. Okay. So we have some question. We have one question from the comment. No entity is too big to fail. Is there any out there right now that you think may pose a systematic risk?
This is how FUD occurs.
That's true. What do you? So I mean, is there anything? Because I mean, obviously, the fallout from FTX is still unfolding right now, right? I don't think we can bear the whole industry.
The FTX thing, though, maybe just to highlight something, right?
Yeah.
The FTX thing, for lack of a better term, yes, I understand that the Singapore retail market got affected by it, but on a global basis, it's not as much. Actually, the FTX thing affected institutional trading shops more. Because it was not really a spot venue, it was more of a perps venue. Yeah. And it was a lot more institutional driven, a lot more of the trading shops, etc. Yeah. Now, in terms of, to that question, in terms of who's next is probably the best question. Well, once again, DYOR, look at the smoke out there. Yeah. You could probably dig to find where the fire is, to be fair. But I think it wouldn't be good for any of us to name anything right now.
For sure.
Yeah.
Okay.
For fear of it, but yeah.
Okay. Got it. That's fair. Maybe the last few questions from my side is mostly 2023, right? What are you guys personally looking out for or excited about this year?
Well, for me, as I said, I'm looking out for what is the killer use case, right?
What do you think it could be, though? Like
if I knew I wouldn't be sitting here, I'd be working on it.
Like last year, there were a lot of like interesting use cases that came out. You know, NFT blew up, gaming blew up, like play to earn, right? Then, where are they right now, right? In terms of gaming stuff, right? So I think everyone's still looking out for those.
Yeah, I think that the gaming use case, the NFT in terms of, you know, community and brand building and engagement is still strong, right? We saw a number of projects launch at the end of the year, right? I think Reddit was probably a really big success. That shows you can still engage a community. It doesn't need to be gamed and pumped, you know, for financial gain. And that it still exists, but it's not new. Right? So I'm looking out for what is the new thing. I don't know what that is, but that's what makes it exciting. Yeah. And in gaming, look, I'm not a gamer, so I'm very critical of Web3 games. They all suck in my opinion, right? Not to offend anybody who created these, but I mean, we're bound to see that next evolution, because
There's still a long way to go.
Yeah, all those big gaming companies have hired the crypto or Web3 talent to do that, and it takes time to make a good game, right? So that's sure to come, and everything that goes in and around that.
Yeah.
So yeah, as I talk about it, that is exciting to look out for.
Yeah, I think for me, what I'm excited about is some of the Web3 initiatives that are coming out of the household name type companies. You know, big global brands, call it your Fortune 100, who have realized that there's something to do here. As case in point, hopefully everyone here at this table saw that BitGo was named to power Nike's .swoosh initiative, which is obviously a big seal of approval for what we're doing. I think that what's really exciting in this Web3 space is that there's just going to be tremendous growth out there because of the fact that up until now, a lot of what we've seen has been mostly minting and selling of collectible NFTs, which was a low barrier to entry for the brand that was doing the issuing, but a pretty high barrier to entry for the end customer because, you know, they'd have to BYO their wallet, right? You have to bring your own wallet.
Yeah.
I think that people have realized that that is a point of friction and are working with firms like BitGo to sort that out. And in particular, you're also seeing these brands grow up and migrate from just collectible NFTs to NFTs with a bit more utility behind them, meaning things like tickets or token gating, virtual experiences or experiences in real life.
Yeah.
And, you know, I think all of us have a bit of an inner child in us. And when you see brands that you've idolized your entire life, whether it be, you know, a Nike, a Coca-Cola, or here in Singapore, someone like an SQ going into the space, I think there's going to be tremendous growth and a lot of cool work to be done.
SQ is coming to the space.
Well, no. I cannot.
Example
neither
is
confirm
example.
nor
I need to
deny.
do something with my points. 'Cause
Yes.
they're sitting there.
If anyone is out there at SQ, call me.
I think what I'm excited about is the maturation of the industry. We've seen, well, most of us here, and I'm guessing most of our shops, we've seen two proper crashes over the last couple of years. Right? There was the 2018, 2019 one. There's the one that just happened as well. And actually what's happened, if you think about it, each time we've grown up, the first crash happened on the back of the ICO boom. And that was what I like to call the Martin Luther King, because there was a bunch of people with white paper saying, I have a dream. And he ran around doing it, raising funds.
Yep.
The last cycle was more like, I have a dream and I have an MVP for you. I kind of feel like we've passed that. And the reason why is funds, investors are a lot more astute now. They're like, cool, but is your idea solving an actual problem or a problem that you have in your head? And I kind of feel because of that, there is that maturity coming into the space where people will start saying, okay, I had my dream, I had my MVP, I deployed it, and guess what? I've got users. And I think we're going to see more of that in 2023. Will it result in what Leonard is looking for, i.e. the best use case? I don't know. But hopefully what we see is proper adoption.
Yeah.
Proper adoption in a space that says that on a daily basis, well, I use this Web3 application, for instance. I need this underlying token to use this application. And I think that's what I'm excited about in 2023.
Got it. Okay, exciting. Is there any last messaging that you guys wanted to share with anyone that's tuning in right now? What you guys are working on, you guys hiring, you know, and whatnot.
Well, I mean, it's 6 o'clock, and you know, I hope for those who are still on, you know, dialed in to watch us live, you know, thank you for your time. I mean, look, the message is really simple for me. It's, you know, we've been around since 2011. We're here to stay. We're here to build. We're here to collaborate, and really serve, you know, the needs of the market. Whether you're a retail investor, you're an institution, that's we're here for the long run.
Got it.
To echo those sentiments, again, thank you for tuning in. Hopefully, everyone's learned a little bit from this session. As far as BitGo, we are expanding across the region. And if you go to our website, you'll see the job postings that we have currently up. And our goal this year is just to keep building and delivering trust in digital assets.
Nice.
I think my final message, and especially for those, once again to echo it, who are still listening in or who will watch the replay of this, is really along the lines of what happened in 2022 needed to happen. If you think about the collapses that happened, can you imagine if crypto was a $5 trillion industry and this happened? The ramifications. Think about it. And not to lose heart that saying, oh no, crypto is doomed. The reason why is, well, we did see this in TradFi. when Lehman's went down, when all different crises happened one by one. It is not the end of the world. And the best thing about crypto, well, transparently, in traditional finance, we call it a 7-year cycle where things come back. Crypto feels like a 7-month cycle, to be fair. Everything is compressed. So it's really not to lose faith in what it is trying to do. There is the possibility that we move forward. There is a lot of belief. The OGs, we've been around for a while. And the reason why is we believe in it. We believe in the direction it takes. It's really just to batten down the hatches, have some faith in what's happening, and look towards the positives of the space, rather than harping over the destruction that's happened around them.
Got it. That's a very wonderful point. Thank you all for joining us today at Chain Debrief. Again, my name is Jackie. Thank you, Leonard. Thank you, Steve, and thank you, CJ, for joining us. If you have anything that you wanted to update us, let us know in the comment section, and then we'll be sure to let the respective guests know as well. For those of you who are joining us for the first time at Chain Debrief again, thank you all for watching. I'll see you in the next episode. Bye bye.
Thank you.
Thank you.